Let me begin with a gold story.
Gold fever here, and it is a great time to be a smelter.
Gold hitting a fresh all-time high today, posting its 26th record settle this year.
You could call it a modern-day gold rush, with gold prices this month reaching all-time highs.
It's a pretty significant bull market, and the key thing to remember about gold is the gold market absolutely loves President Trump.
Gold, the champion of currencies that has held value for thousands of years, now seems to have a significant rally in 2025. With gold prices up close to 30% just from the start of this year, one major question must be asked. Is any of this sustainable? Well, to answer that, we must look into what is driving the cost of gold. In my opinion, I see four major issues driving the gold price. Number one is foreign central banks are increasing their gold holdings. Number two is wars and political uncertainty. Number three is inflation. And number four is rate cuts. In recent years, the dollar has slowly been losing ground as the world currency, while gold has silently been gaining traction. The United States' rival China has increased its gold reserves to be now estimated at 243 billion and is expected to grow their reserves in order to separate itself from the United States dollar. This is because they eventually want to prop up their own currency and strengthen that over the dollar on the world stage. But it's not just United States rivals that are buying up gold. Poland, a member of the EU, has drastically increased their gold supply. Poland in Q2 of 2025 bought up close to 19 tons of gold. Poland has announced that it wants its gold to make up 20% of its reserves, citing that it's wanting to protect itself from turbulent times and economic uncertainty. Several other countries like Kazakhstan, Turkey, and the Czech Republic are becoming major purchasers of gold due to the fear of uncertainty, and this leads us to the second major issue, which is wars and political uncertainty. With the Ukraine and Gaza wars gripping the West, and what seems to have no end in sight for either of the wars, many political powers fear the damage and overall spending with the inflation that goes with these wars. The United States alone has sent $175 billion to Ukraine and about $18 billion to Israel. Factor in other political tensions like China and Taiwan, Iran, and the general domestic tensions within the U.S., it starts to not see that difficult why other countries might be hedging against the dollar. It just seems that in general the United States could be stretched a little thin. And with a lot of political uncertainty inside and a lot of economic issues inside the United States, it's not hard to see why countries like Poland, and especially rivals like China, are trying to leverage or protect their own countries with gold. And this leads us on to the third and fourth issues that I see that are propping up the gold price, which is going to be inflation and interest rate cuts. The average American family has experienced rapid increases in prices since the COVID pandemic, and they've seen increases anywhere from food to their medical costs to housing to cars, and it looks like there's no end in sight. And recently, with all this inflation, we've also had a massive drop-off in jobs as well. In a video I did a couple of days ago, I talked about how the Fed is now starting to change its position and move to rate cuts. Well, cutting rates typically makes debt cheap and the dollar easier to acquire. And what will this do? This will increase inflation. Now, gold overall, historically, has been a hedge against the dollar. So if you already have high inflation that's been wrecking the middle class for the past 5 years or so, and then you add on top of that a rate cut, whether or not you think a rate cut is needed and will fix it, the fact of the matter is inflation will increase. And when inflation increases, the dollar decreases and the gold increases. So what do all these points mean? Like, what do they point to? Well, overall, I think all of these points lead to an overall distrust of the United States dollar. And it's starting to force nations, but also individuals, to look somewhere else besides the dollar for security. Now, I've always been critical of gold as being an investment. And that's one thing that when I watch a lot of YouTube videos and I see online of people talking about gold, sometimes people like to prop it up as an investment. Well, if you want to talk about an investment, the S&P 500 and the Dow Jones outperform the gold basically if you look at any 30-year stretch. it'll outperform gold. But where I think gold's real value comes into, and where its real, economic impact is its insurance against the dollar. It's the hedge against the dollar. And I think that's where we are seeing this tick and surge in gold prices. Because overall, the more people start to distrust the dollar, the more they turn to gold and silver and other precious metals. Now, can these prices hold? Can they increase? And I would say, as long as there's wars, as long as there's political uncertainty, and as long as there's massive spending and inflation, I don't see why gold wouldn't continue to surge. I mean, we still have tariffs, and if tariffs start putting a burden on the United States dollar and increases inflation as well, I could see gold continuing to surge that way. The overall fact of the matter is, if we continue to spend and devalue the dollar, gold will have to increase in price. So, to sum up, gold has increased close to 30% this year, and I don't really see it coming down. Now, we could decrease spending and we could curb inflation, but if you just look at the wars and uncertainty and you see what other countries are doing when they buy up gold, the more they buy up gold, the more it increases demand. Basic economics is as demand increases, so does prices increase. So even just on an international level, not even just looking at the United States problems, but looking at Poland, China, and all these other countries, they want more gold. And the more gold they get, the higher the price will be. So I don't really see gold prices taking a dramatic dive. It could come back and fluctuate, obviously, but it looks like gold prices, theoretically, if everything holds, could stay the same and continue to increase. So, but what do you think? Let me know in the comments. Do you think gold price is sustainable? Do you think it'll decrease? Do you think it'll increase? Or do you think I'm completely wrong on everything here? Let me know below. And as always, thanks for watching.